next guest says we are already in a soft landing. The question is whether it lasts. Joining me now, Julia Coronado, founder of Macropolicy Perspectives, and joining us also in the exchange is Steve Liesman, of course. 2023 has been a soft landing, you say. We are living the dream.
We're living the dream. It's not a destination, it's an environment. And you can't really argue that low unemployment, healthy job gains, and declining inflation isn't a soft landing. It has been a soft landing.
But
GDP.
We're still quite a bit away, aren't we, from the Fed's goal of 2%
Absolutely.
Inflation.
That's right.
And is this last mile going to be the hard mile? In other words, the drop from 7% a year ago has been pretty precipitous.
Right. No, we are not of the view that the last mile is the hardest. We see plenty of the seeds in today's report that process is ongoing and will continue, and that we will be very close to the Fed's destination by the end of 2024.
All right. We've got a 30-year bond auction to tell you about, and Rick Santelli is just the person to do it. He's tracking the action at CME. Rick?
Well, Tyler, the last 30-year bond auction is what started the entire craze about paying attention to weak auctions, but it wasn't meant to be two in a row because this 30-year bond auction went quite well. I gave it B as in boy. The yield at this Dutch auction, 4.344. The when issued market, well, its yield was a smidge higher, closer to 4.35. So when issued is lower, that means the government sold its paper at a higher price, and that's a good thing. So pricing was a good mark, and pretty much the metrics were all or slightly above 10 auction average. The one standout, indirect bidders. That's the one we pay attention to because it includes foreign purchases, and those foreigners did step up. 68.5, the best since July of this year. 68% is the 10 auction average. We all know that you could have a lot of soft auctions and not necessarily say that Treasury supply is doomed in the future, but it always pays to pay close attention to every auction to see the ongoing demand profile, because we know with the amount of debt we have to service and the amount of debt we have to sell that we're going to have large auctions for a long time. Tyler, back to you.
All right, Rick Santelli, thank you very much. Steve Liesman, let me turn back to you and see if what you think of the inflation numbers as we look at them now. Core inflation is still at 4%, and the Fed wants it at 2%.
Yeah. First of all, let me just point out a B in Rick's class is like an A+ in every other class. As you know, Tyler, Rick rejected slide rules when they came along, let alone calculators. He wouldn't let his students use those. So he's tough, and that's a good auction. I'm seeing yields come down. That's going to be helpful, I think, for the economy. On the inflation story, I think it was a very neutral report. I did not see the positive bullishness that a lot of people saw. And, you know, getting back to Rick, he said it this morning that it was a bit of a Rorschach test, and I like that. And I like to think of it the way Powell's going to think of it. And he's going to point out, Tyler, what you just pointed out, that the service number is sort of barely budged, the 4% number. He has put that out as the marker. He'll acknowledge that the headline is better, but he's not running an oil company here where he's trying to, figure out what's happened to oil prices. That's what headline inflation is telling you. I like that food prices came down. I think that's going to help, or food inflation came down. I think that's going to help. There is some disinflation or even deflation on the goods side. But Powell has focused his policy and his outlook of policy on the service side. There's less improvement there. I think it's coming. But I don't think it's going to be a guessing game, Tyler, where we're going to wonder what Powell thinks of it. I think what's going to happen is we're going to see the numbers, and we're going to know that he and other members of the Fed board like those numbers enough to cut rates. These were not those numbers.